The chart I'm showing you right now is a hypothetical $10,000 investment going back to 1993. And what this does is it shows all along, month by month, the performance of these two investments. One of them, the red line at the bottom, is the S&P 500, and if you look at the blue line, you would probably think that this is some high-growing, high-flying tech company that you've never heard of, but it's actually a boring company that you never thought of, and while you look at the outperformance, you see the blue line getting further and further away from the red line. While that may look impressive, what's really impressive is when we take off the logarithmic scale. Look how far the blue line is above the red line, and this is not some high-flying tech company. This is Altria, the company that sells tobacco products like Marlboro, Black & Mild, AB InBev, Juul. There's so many different products like Marlboro, Copenhagen, and many other tobacco brands that you know and see people buy and smoke every single day, and this has outperformed the S&P 500 by a significant amount going back to 1993. If you would have invested $10,000 in 93 into the S&P 500, you would have $140K right here, compounding at 9.59% every single year. If you would have made that exact same $10,000 investment into Altria, instead of $140,000, you would have had over $500,000 growing at a 14.59% compounded growth rate. Exactly 5% higher year over year for decades on out, higher than that of the S&P 500, with not a whole lot more volatility, with its max drawdown only being about 10% higher than that of the S&P 500. Furthermore, the obvious statement and the reason why people own this stock is the massive income that this company produces. This is a $10,000 investment going back to 2010 when they did their big spinoff with their other big brand, and this shows the $10,000 investment just in 2010. So this will be a lot higher, but this is only about a decade old. In 2010, you would have made 764 versus 205, and then you see this dramatic difference get higher and higher. And then last year, in 2021, your $10,000 investment into the S&P 500 would have produced $642 in dividends, while Altria would have produced over $3,000 in dividends. So we're going to talk about what makes this company great. We're going to talk about this company's long-term growth of earnings per share, its revenue growth that it's had, which has been slow, but it is still growing its big core products, as well as some of its newer product on the blocks, like a Juul, which is a strategic investment that is growing this company a lot faster than its old school brands. We're going to talk about the moving beyond smoking. It's the head of their investor relations page. One of the biggest bullet points of the company is moving beyond smoking. This company is focused on the future, not on the past, and I think that that is a good thing. We're going to talk about return capital to shareholders, both forms of return capital, by the way, not just dividends, not just share buybacks. We're going to be talking about both. Then, of course, we're going to be pulling up different revenue charts, different free cash flow numbers. We're going to talk about shares outstanding, balance sheet, dividends, share repurchase, net income, earnings per share, you name it. We're going to go through it all. It's going to show a lot of important details that you may or may know about Altria, which will give you a very quick, very brief overlook of the company, which could give you some insight whether or not you think this company is worth investing in. So it's going to be a fun one. Stay tuned. If you haven't seen me before, my name is Jordan. I'm a millennial investor. Here's my portfolio balance as of the time of filming, $34,000. Here's my performance as of joining this brokerage, and here's my balance month over month since starting YouTube, my holdings, my performance, my monthly YouTube income, my lifetime YouTube income, and then of course my portfolios, which are down below in the description, which you can catch yourself firsthand, including the holding of Altria and my dividend growth portfolio out of these 20 stocks. You can check that out on M1 Finance, and if you do so, you would be help supporting me in the channel by getting $10 for signing up. So check that out down below in the description if you're interested, so you can get an awesome brokerage, use awesome charts, investing charts, information that you want to know about a company, and overall get set up for an investing portfolio. So thank you guys for tuning in, and without further ado, let's go ahead and jump into Altria. Now, Altria did just report their revenue of about $5.41 billion, which is pretty much flat. And you see, by the way, if you look at these massive numbers up here around 2006, and then they free fall, that's because the company had a huge spinoff. So really only look at about 2010 and beyond. That's really only the company's numbers that are relevant here. At around $4 billion, $5 billion back in 2010, they've slowly grown it, but not much growth going back over the past decade. However, they have grown free cash flow pretty decent amount. You can see that generally speaking, this is going slightly up, but not very much at all. If you look at this on an annual basis, this is much more easier to read when you factor in the spinoffs. In 2008, they did $16 billion. Last year, they did over $21 billion. So they're growing, but it's very slow. Over the last 10 years, they're growing at about a 2.4% rate. Now, in terms of the profitability, the actual free cash flow, that's really what we want to know as investors. That's what's really important here. Over the last 10 years, their free cash flow, which is the profitability, has grown almost 9%. So the good news is for investors in this company is while revenue growth has slowed, growing only 2.4% in the last decade, the profitability is which really matters for a company like this has grown at almost a 9% clip. And of course, over that time, this company has returned a lot of money to shareholders. We'll go over this money that's being returned in just a second, but let's go ahead and go to the investor at a glance. I want to show you this, the earnings per share growing up over time. This is on their main investor relations page. It shows it from 2017 to 2021. This earnings per share growth shows going up almost 8% clip year over year over year over the last 5 years, and this factors in a time when people are not smoking very well. Now the cool part is a lot of their products, like we talked about, are very old school tobacco-based products that people don't like, and just to be honest, the overall public view of these brands are not very good. However, a lot of their older brands that are already popular, that have been around for decades, like a Marlboro, like a Copenhagen, like a Black & Mild, are finally becoming less and less of a picture, and we're focusing more so on the new age investments, like a Kronos, like a Juul, and many other names that this company is investing in. They're also testing out new products every single day. So I think these old school products that throw off a lot of free cash flow, they're great investments, but in the long term, I think they're going to have a gradual downturn, and they can only raise prices so much because people are invested, they are addicted to these tobacco products, but as you can see, the long-term opportunity is not so great because as they raise prices, more and more people are never getting started with investing, never getting started with smoking cigarettes in the first place, which is why you've only seen revenue growth from about 16 billion to 21 billion in over a 10-year period. That might sound great, growing revenue $6 billion, but when you consider it was over the period of over 10 years, that's not so great. 2% revenue growth is not good enough to sustain this company for the long term, in my opinion. Now, the cool part is if you look at the main tabs of their investor relations page, there's 5 here. And the second one past the About Altria, you see Moving Beyond Smoking. Now, I could sit here and talk all day about the CEO's comments. I could talk about the direction that the company's moving. But long story short, this company is focused big time on moving forward with investing in the future. Like I said, they have these different products, these different brands, these different companies that they're investing in. And what I really see this company doing is similar to their stake in AB InBev, okay? Now, AB InBev is a perfect example of what a company like Altria wants to invest in. Let me go ahead and pull that up real quick. If I pull up AB InBev stock, this is the perfect example of how Altria bought out 10% of this company years ago. Look at the profits that this company has produced over the long term, okay? And more importantly, the dividends that they pay out. Look at the dividends that this company has thrown off over time. While we have struggled recently over the last couple of years, they have thrown out billions of dollars of dividends every single year, and Altria, who bought their stake many years ago, Altria just has to sit back, wait back to collect their checks, and wait for these money payments to come in. Now, I think if we're going to see a similar strategy when we look at something like a Kronos, eventually these type of companies will eventually pay a dividend, and guess who's going to own a big stake of them? A company like Altria will do so. Now, moving beyond smoking is important, of course, but so far their long-term track record of their old school tobacco products have been very successful. What we see here in these columns, we see 3 columns. We see the repurchase of stock, dividends paid, and then we see overall capital returned. And so what I think is important here is to look at both of these columns and all 3. The dividends are going to be on a consistent growing basis. Right here in this middle column where my mouse is, where I'm highlighting, you can see that in 2008, it was 1.2 billion, 2.6 billion, 2.9, 3.2, 3.4, 3.6, 3.8, 4.1, 4.5, 4.8, 5.4, 6, 6.2, 6.4, and then so far in 2022, they're on track to exceed where they were before. Now, share repurchases are a little bit wanky. Sometimes they're really high, sometimes they're really low, depending on where the price of the stock at. But generally speaking, if you look at this far right column under capital returned over here, you can see that generally speaking, it's going up from in 2008's $2 billion to last year's 2021 $8 billion. It's pretty much 4x since 2008. So a pretty big ramp up there, and that is not a small amount of money. That is billions of dollars in capital. So if we look at this company's stock price today, ticker symbol MO for Altria, you can see that year to date it's down 4%. In the last year, it's only up 1%. And this is a non-volatile stock. It is one that doesn't move a lot, and it pretty much trades sideways. The good news is in the meantime, you're getting a ridiculously high 8+% dividend yield with a growing dividend. Like I said, it's grown from 66 cents to 70 to 80 284, 286, 290, to now this most recent quarter they're paying out 94 cents, and that is growing every single year despite its incredibly high yield of 8 plus percent. So this is not a company that I expect for you to get some massive return of doubling your money or anything like that, but over time, as they buy back more shares, your shares become more valuable, you own a higher percentage of the company just to wait, and they obviously raise their dividends, and they do not have the best balance sheet. No, it's true. If you look as of the most recent quarter, let's pull up the quarterly numbers here. They do have a cash and debt pile that's not that pretty. Cash on hand as of the most recent quarter was $2.5 billion versus the debt, which currently sits at $25 billion, and that's not very good, but they do have consistent cash flows that can easily pay that, which have been growing consistently over time, as you can see right here. Furthermore, this is a company that's defensive in recessions, and so far has held up well despite the economic environment, high interest rates, low interest rates, recessions, economic booms, economic busts, you name it, it doesn't matter. Pretty much generally speaking, this company has done well in all environments. And so that's why it is in the dividend growth portfolio. This high 8+% dividend yield, in my opinion, can be maintained for the next several years. While I'm not very bullish on smoking for the long term, I think that they will eventually move forward into other categories that can hopefully help turn this business around and shift the overall dynamic and view of the company. But other than that, guys, thank you so much for watching. I appreciate you watching all the way to the end. Check out all the stuff down below in the description, including $10 to get signed up with them on finance. But other than that, thank you so much for watching, and I'll catch you guys next time.